What if you could start investing right now with just $100? You can use free apps and do not need a finance degree, Wall Street connections, or even a calculator. This is not a dream. It is entirely possible. Begin with $100, no excuses, no confusion, no overwhelm required. You do not need to be wealthy or an expert. You simply need a small amount of capital, a slight mindset shift, and the right strategy. Ready to take control of your financial future? Like this video, subscribe to Wisen and turn on notifications. We will show you how to turn $100 into your first step toward financial freedom, long-term wealth, and investor confidence. Why $100 is more powerful than you realize. Successful investing is not defined by your starting amount. It is about starting, sticking with it, and scaling up. In today's economy, where inflation erodes savings and costs rise, beginning small can lead to big results. Many people delay investing because they think they need thousands of dollars, but that's a myth. Historical data shows that consistent contributions over time outperform large lump sums invested sporadically. Your first $100 represents more than money. It is momentum, discipline, and belief in your future. This small step builds habits that last a lifetime. For instance, if you're in your 20s or 30s, starting now leverages time as your greatest asset. Compound interest, often called the eighth wonder of the world by Albert Einstein, turns modest investments into substantial wealth. Think of it like planting a seed. With time, patience, and consistency, it grows. Starting early maximizes compounding, fueled by reinvested earnings, regular monthly contributions, and a long-term perspective. Let's break down compounding. It's when your investment earns returns, and those returns then earn more returns. Over years, this creates exponential growth. Consider this example. Investing $100 monthly for 10 years at an 8% average annual return could grow to over $18,000. This results from compound growth, smart habits, and consistency. Plugging in, you get approximately $18,295. This isn't guaranteed, as markets fluctuate, but historical stock market returns average around 10% annually, making 8% a conservative estimate. As of August 2025, with the S&P 500 showing strong past performance, this illustrates the power of starting small. Expanding on this, imagine extending to 20 years. The same $100 monthly at 8% could exceed $58,000. Add inflation adjustments, increasing contributions by 3% yearly, and it grows even more. This demonstrates why procrastination costs dearly. Delaying by 5 years might have your final amount. $100 isn't just cash, it's a commitment to financial independence, breaking free from paycheck to paycheck living. Where to invest your first $100? Now that you see the potential, let's explore 5 practical, beginner-friendly options. Each is accessible via apps or websites with low or no fees and designed for small investors. We'll cover pros, cons, steps to start, and real-world examples to make it easy to understand and actionable. Fractional shares. Buy portions of stocks like Amazon or Google for as little as $1. Platforms like Robinhood, Fidelity, and Charles Schwab let you invest in companies like Apple or Meta with a small budget. Gain access, diversification, and market experience starting with $100. Pros: affordable entry, no need for full share prices, for example, Tesla at $200 plus per share. Real-time learning about stock movements. Cons: volatility, prices can drop quickly, requires research to avoid poor choices. Steps to start: download Robinhood app, verify identity, link bank, search for stocks, buy fractional amounts. For example, allocate $20 each to 5 tech giants for instant portfolio. As of 2025, Robinhood offers commission-free trades and educational tools, making it ideal for newbies. This option teaches market dynamics. When Apple releases a new iPhone, watch your fraction grow. ETFs, exchange-traded funds, invest in baskets of stocks through funds like VOO tracks S&P 500 or SPY. ETFs offer instant diversification, lower risk than individual stocks, and low fees. With $100, you gain exposure to entire sectors or indices. Pros: passive investing, set and forget. Historically, S&P 500 averages 10% returns. Cons: market downturns affect all. Some ETFs have niche risks like ARKK, innovation-focused, volatile. Steps: open Vanguard or Fidelity account, fund with $100, buy shares of VOO, expense ratio 0.03%. Example: $100 in VOO gives you a piece of 500 top US companies, from Microsoft to Walmart. In 2025, with economic recovery post-pandemic, ETFs remain a staple for long-term growth. Diversify further by splitting $50 in VOO and $50 in a bond ETF for stability. High-yield savings or money market funds. Earn 4 to 5% interest while keeping your principal safe. Services like Safi, Ally, and Marcus by Goldman Sachs offer competitive rates and FDIC insurance. Ideal for emergency funds or short-term goals. Pros: low risk, liquidity, withdraw anytime. Beats traditional savings 0.01 to 0.5%. Cons: returns lag stocks during bull markets. Purchasing power. As of August 2025, top rates hover around 4.2 to 5.0% AP per sources like NerdWallet and Bankrate, down slightly from peaks but still strong. Steps: sign up on Ally app, deposit $100, watch interest accrue daily. Example: $100 at 4.5% grows to $104.50 in a year. Use this as a foundation before venturing into riskier assets. Invest cautiously. This is a high-risk asset class. If exploring, start small with Bitcoin or Ethereum using Coinbase or Kraken. Only invest money you can afford to lose. Treat this as a learning experience, not a primary strategy. Pros: potential for high returns. Bitcoin surged 50% plus in past years. Cons: extreme volatility, regulatory risks, hacks. In 2025, with ETF approvals, crypto is more mainstream, but crashes like 2022 remind of dangers. Steps: create Coinbase account, verify by $20 Bitcoin. Example: $100 split between BTC and ETH for diversity, but limit to 5 to 10% of portfolio. Educate on blockchain to avoid scams. Robo-advisors, automated services like Betterment or Wealthfront, build ETF portfolios tailored to your goals. They rebalance automatically and offer tax efficiency. Perfect for hands-off investors. Pros: customization based on risk tolerance, 0.0 to 5%. Cons: less control, small management costs. Steps: answer questionnaire on Betterment, deposit $100, let AI manage. Example: a conservative profile might allocate 60% stocks, 40% bonds, growing steadily. In 2025, robo-advisors use AI for better predictions. The wealth-building mindset. Investing success requires the right mindset, habits, and consistency. It's not just about money, it's psychological. Behavioral finance shows emotions like fear and greed derail plans. Starting with $100 teaches risk management, regular contributions, and long-term thinking. Build resilience by viewing dips as buying opportunities. Many fail due to lack of discipline and patience, not lack of capital. Studies from Vanguard indicate consistent investors outperform timers. Key principles: start small but invest consistently. Set auto deposits for $100 monthly. Avoid chasing trends or panic selling. Remember 2008 crash, those who held recovered. Prioritize learning over quick profits. Read books like The Intelligent Investor by Benjamin Graham. Add gratitude, appreciate small wins. Visualize goals like retirement or home ownership. Surround with positive influences. Join online communities like Reddit's Arch-Person Alphanance. Common mistakes to avoid. Protect your capital by avoiding pitfalls that trap beginners. Avoid hype. Ignore trending stocks and emotional decisions. GameStop saga showed FOMO leads to losses. Diversify. Never concentrate investments in one asset. Spread across options above. Minimize fees. Choose low-cost platforms. High commissions eat returns. Protect essentials. Only invest discretionary funds, not rent or bills money. Other errors. Ignoring taxes. Use Roth IRA for tax-free growth. Overlooking inflation. Aim for returns above 3 to 4%. Trading too frequently incurs costs and stress. Tracking and protecting investments. Safeguard your $100 with vigilance. Use regulated platforms with two-factor authentication to prevent hacks. Track performance through app dashboards or tools like Excel. Review monthly. Is your portfolio aligned with goals? Continuously educate yourself via videos, podcasts, or courses on Khan Academy. Stay updated on 2025 trends like AI investing. Monitor fees, taxes, and rebalance annually. Protect against scams. Verify sources. Final thoughts begin now. Wealth accumulates through consistent action, informed choices, and discipline. You do not need perfect timing or knowledge. You need to begin. Procrastination is the enemy. Action is the ally. Start with $100. Start with belief. Start with vision. Subscribe to Wealth Wisen, leave a comment, and let's build wealth together.